telling y'all. People don't let money. Don't let money change you. Almighty dollar. I keep telling y'all. People don't let money. Don't let money change you. Almighty dollar. Yeah, 'cause it'll keep on changing. Yeah, changing up your mind. Oh, it'll keep on changing. Yeah, changing up your mind. I'm telling y'all. People don't let money. Don't let money change you. Some people got to have it. Yeah, yeah. Some people really need it. Listen to me, y'all. Do things, bad things with it. Well, you wanna do things, good things with it. Yeah. Talk about cash, money. Talk about gas money, dollar bills, y'all. Come on now. Yeah, yeah. Yeah, yeah. People will steal from their mother. People will rob their own brother. People can't even walk the streets because they'll never know in the world they're gonna meet more than me great almighty dollar. Got money. People will lie, they will cheat. People don't care who they hurt or beat. A woman will say.
Please note that World HD posts on social media may include statements concerning financial market trends and are based on current market conditions, which will fluctuate and may be superseded by subsequent market event. The investment strategies and broad themes discussed in World HD live streams, recordings, and social media posts may be unsuitable for certain investors depending on their specific investment objectives and financial situation. Information and data contained in posts and on live streams have been obtained from sources believed and checked to be reliable, but not guaranteed. You should note that the materials on the social media platforms are provided as is without any express or implied warranties. Past performance is not a guarantee of future results. All investments involve a degree of risk, including the risk of loss. Any comments made in the materials are opinions with no guarantee that any expressed course of events will actually transpire, and no compensation has been paid to any person providing a testimonial or comments.
Oh, say, can you see by the dawn's early light what so proudly we hailed at the twilight's last gleaming, whose broad stripes and bright stars through the perilous fight and the ramparts we watched were so gallantly streamed for the land of the free and the home of the brave.
Very good morning to you on this November 6th, 2025. This is World HD, live each weekday, 8 a.m. Eastern Time, streaming live on X, Rumble, and YouTube. Today is Equity Thursday. We're going to take a look at the stock markets, see what's going on. There's a lot of things for the stock market to interpret right now. We want to go through some of those things. Obviously, we have the SCOTUS case, right? Supreme Court on the tariffs. Take a deeper dive into that today. I've got some clips put together for us with Wilbur Ross. Wilbur Ross was the prior Secretary of Commerce under Trump 1.0. He's also got a pretty good background and just all things worldly, right? I mean, way older dude. Nickname is the Bone Collector because he buys things on the cheap that are pretty much done, refurbishes the companies, and then sells them, right? So buys stuff cheap, fixes it up, and sells it. All right, flipper, I guess, flipping companies. That's kind of his background. Anyway, a lot of good insight on that. And so we want to look at that today, where that thing stands. But then there's also a lot of stuff to interpret. We get these terrible, again, we're not going to get the non-farm payroll data this week because obviously the government is still shut down. But we did get this Challenger job cuts data that came through today. And it's just funny. I had Bloomberg on this morning and CNBC, and I'm watching them both. And they just love it. I mean, it's just incredible. They just love to trash the dollar. I mean, it's like they have a hatred for it, you know? And not only that, they cheerlead it. They're like, and the dollar is going back down. And this is great. We love this data because the dollar is going back down. And it just takes a little bit of a dip, just a little pullback. But they just delight in it. And it's both the head economist guy that comes on with Bloomberg and the head economist guy that comes on CNBC. They just delight in it, especially the Bloomberg guy. I mean, he's like off the edge. Okay, so anyway, so we're going to go through that stuff this morning on the economic data. And again, we continue day 37 of the government shutdown, so we're breaking new records. I'm not sure if they're good records to be broken, but we're breaking new records. And then I want to kind of show you what happened in the S&P yesterday as it's trying to interpret all this information. It got pretty overextended. And remember, Wall Street's out, telling us that AI's, a little bit overdone and it needs to back off a little bit and so forth. Okay. We get a couple days sell off in there. And then yesterday they ripped the market and they take it exactly to where about as far as they can take it without, again, like I say, markets don't like to stick their neck. People don't like to stick their necks out. But they ripped that thing is pretty much straight up with one little tiny pullback in there. So it was a concerted effort for sure. And again, I don't know who drives this, but I don't know how this exactly works, but here's how I would figure that this works, okay? And I'll just kind of give you a little bit of an intro on this. Then when we look at the charts, hopefully this will make more sense, is that I think somebody comes in and turns the market, all right, for some reason. Somebody big, okay? And maybe the word gets out, however they get it out. But then I think the algorithms pick up on it, right? They pick up on this volume flow coming in. And then any time that they try to liquidate or anything else, whoever it was that kicked that rally off just comes in and just supports it and supports it and supports it. They don't let it drop. And this is a thing that I've seen. It used to be in markets, you would sometimes get these things called V bottoms, right? Where market comes down and it just puts in a V bottom, literally like a V, boom, boom, straight back up again, or V top. V bottoms more so because why? Because the market's been trending up. So you get a V bottom selling fear, right? Something, market sells off, there's fear. And then it rips on the upside, right? So again, it's that concept of selling the fear. And if that's going to change, then we would see V tops, okay? We would start to see that kind of stuff. These sharp moves up, right? Selling hope, right? And then it dwindles off, all right? And so yesterday, though, what we saw is they ripped it as far as they could, and then they held it up there for like an hour, right? An hour, 2 hours, and middle till right about 3:30, 3:15, 3:30, maybe 3 o'clock, somewhere between 3 and 3:30. They just started selling it, and they just hammered the S&P. Now, again, relative to the move up, I think it was a 110-point move up in the S&P, which I don't even know what the market cap on that is, but it's massive, right? That's a lot of market cap, like a lot of money, coming and going into, in and out of thin air, back and forth over and over again. Anyway, they pull it back. It's a small pullback, but it's still a significant pullback. It was a stiff pullback. All right, so that's what we want to talk about when we get into those charts. But the thing I want to talk about these V bottoms is they were pretty rare, right? You didn't a lot of times get these V bottoms or these V tops. It was a pretty rare occurrence, I don't know, 5 years ago and before that, at least, from 5 to 35 years ago or something like that, It was pretty rare. They happened, but they were somewhat rare. It took a lot, right? Especially when you had the floor and you had diversification across markets, right? There wasn't this coordinated effort, right? You didn't have, however these people are communicating, however this is going on, it didn't exist back then, right? They didn't have the ability to communicate so quickly. Phone lines, yeah, whatever, but it wasn't as fast, right? However these cheaters were cheating, okay, it wasn't as fast as it is now. And so now they get the word out quickly, and the algorithms pick up on this. And when they come in, they just come in. And so we see V bottoms all the time. I mean, they're just like every day there's a V bottom in these markets, right? Every single day. It just goes down, and when it's done, they just come in and start buying it again, right? And so that's very rare. And that's probably the biggest change I've seen in the markets is that kind of it used to be you'd get a lot of saucer bottoms, right? Market would go down. It would start to decide. You get some people taking a chance, some people saying, I don't like this, getting out, getting in, getting out, getting in, getting out, and then it would kind of bottom out. Let me turn this down here. I got news wires coming through. And it would kind of bottom out like that. Now it's just wham, wham, and so that's probably one of the biggest differences that I've seen. Okay, I think that's good. Let's go ahead and jump in here and see if I can't get this. I'm not sure. Who knows what's going on with? I've got other issues with technology every day. There's something. Can never just be good. All right, let's see if this is going to work. Okay, good. I'm not sure. Okay, all right. We'll just keep rolling because something's not right here, but that's okay. All right. So let's take a look at this. We've got the economic data for the week. Remember, the big takeaway for us this week is what's coming tomorrow. Okay, the FOMC and all these FOMC speakers, are they going to tip the scales? And does the data that came out today, the ADP coming in a little bit better than expected yesterday, we kind of walked through that. As it came out, we looked at the small business, medium-sized business, large business. We looked regionally at these different things, and there was just a lot of noise, right? Some came from way down last month to positive. Some went from way positive last month down to negative. And then a couple of them were just even, from the north, the south, the east, and the west. And then they break that up into regions. And then we looked at it from small, and the large business was the one that was adding, the other ones weren't. And this goes back to that Russell 2000. Since today's stock day, we'll talk about that. Take a look at the Russell 2000 today. That's where we really want to see the growth, right? The small companies. That's where we're begging to see the growth come through, is in these small companies, because that will give us some kind of confirmation that this tariff policy that we're going to talk about today is actually helping bring jobs back, helping bring manufacturing back, helping revitalize the U.S. from the bottom up. I just got to shut this thing all the way off. There we go. These guys won't stop. Okay, this guy on this news wire, I mean, I sometimes I almost can't even believe that I pay to listen to the pain that this guy, he just such a painful voice, and when he starts talking, he just doesn't stop. It's like I'm like, why do I pay every month to listen to this knucklehead every morning? Anyway, okay, so okay, I was just looking at a couple news wires there. It looks like some earnings are coming through, and we've got U.S. Trade Representative Greer saying the justice has had fair. Let's take a look at that. That'll kind of, let me just jump over here real fast. Let's take a look at this. So we've got here this headline. Let's see what he has to say, because this will pass by the time we get there. But we're going to cover this toward the end. Oh, that's it. Okay, so U.S. Trade Representative Greer, okay, said that justice has had fair and tough questions at the tariff arguments. And it looks, oh, here we go. We're starting to get some more stuff come through on him. May get Supreme Court ruling on tariffs before the end of the year. Okay, so that gives us our timeline on that. And I'll keep an eye on this and see if, usually what happens is, one headline will come through, then another, and then this thing will just fill out as he's talking. So he's obviously talking right now. Okay, let's jump back in here. All right, let's get back to our stuff. So again, Couple data points yesterday with the ADP on the jobs, today on this Challenger jobs. We'll look at that here in a minute. Again, they cannot delight in getting something like this where they can trash the dollar. Okay, the economists on these main financial news channels. Okay. All right, now I have to say this. UK Bank of England Governor Bailey is now saying we could have an AI bubble. So this guy, he has no business in there, right? He needs to stick to monetary policy and not talk about the AI bubble. Everybody's crossing boundaries. It's so funny. All right. Okay, well, maybe we'll look at that when we look at that. We'll see if I'll try to see if I can't keep an eye on that headline too as we're doing this, and we'll look at that when we get to the Bank of England. Okay. But that's it tomorrow. Six FOMC speakers. Will one of them come out of their moderate midpoint stance and go towards Schmidt, who's saying rate hikes, or the other one, Moran, who's saying accelerated rate cuts? Okay, that's kind of what I'm looking for tomorrow. And then this Canadian unemployment change tomorrow. Now, I did put together a slide on Canada just to give a brief overview. I don't think we're going to have time to get to it again today, but at least we'll touch upon it. And I think I'm going to have to be out tomorrow. I have to take my daughter to go to the doctor to fight against getting more of getting any jabs. So I probably have to be. What I might do is do a pre-record tomorrow, or do a pre-record at like 7 a.m. or something. Do a shorter show on commodities, and then that way it's available for you guys. I mean, if anybody wants to join at 7 a.m. or whatever, I don't know exactly. Maybe I'll start it at 6:45 or something. I'll probably try to keep it like a half an hour. Just go through the commodities and stuff like that. Maybe cover this Canadian thing, and that's it. Assuming that nothing major happens today, and we don't need to cover that. But anyway. There won't be a show tomorrow at 8, but there will be a show available if you come in at 8 to watch. Okay. Hopefully people will figure that out. All right. And then who aren't here today. Okay. And then let's see, what else did we want to do here? I think that's good. All right, let's just go through these headlines. Government shutdown, day 37. We talked about that. Challenger job cut, 7-month high. All right, let's pull this up. I want to pull this thing up, and we've got, I think that this is going to work for us here. Okay, so most October layoffs in 20 plus years, they say, right? And the U.S. Post, in 20 years since 2003, right? Let me see what else this headline says. U.S.-based employers, fewest hiring plans since 2011. Seasonal hiring plans through October, lowest since tracking started in 2012. Okay, so it's for sure a 7-month high, right, on this Challenger job cuts number. And of course, the headline is the dollar slides on Challenger jobs data. Okay, total BS, right? I mean, the dollar is sliding, but it needed a little bit. It needed a little bit of a pullback. Remember, we'll look at that today too. I think I have that on the list to look at. We should look at that today. It's broken above the breakout zone, and then it's coming back in a little bit. Now, the Swiss franc, it just broke out of its breakout zone and took off. How's this thing going to unfold? Again, we love this dollar. I love this dollar and Swiss franc signal coming in at the exact same time. I mean, that's kind of what I've been looking for. I mean, I couldn't ask for a better set of signals. That doesn't mean the result's going to be good from a trading perspective. I mean, I hope it will be, okay? But, because again, being right doesn't always equal making money, and so I know that the way that this Swiss franc broke out on the downside, it's probably going to get messy at some point, and it's going to be a messy trade. And so I'm trying to get prepared for that, but I'm also trying to carry a position. So it's a very tough place to be when you're stuck in that spot of, okay, I think it's going to get messy, but I have to have exposure, and I have to be willing to suffer with it and live through it. And then the dollar, right? You get things like this, and these are the things that cause these pullbacks, right? Is this kind of stuff. And are these knuckleheads, right, on the financial news networks trying to already use these things for their narrative control? Okay. I mean, are they already? So let's just imagine, right? Let's just imagine that President Trump, right, is shutting down this BLS to expose this to us. All right. And I'll get to this later. That's probably my favorite thing. Yesterday, we're going to look through I had some help yesterday. Jay White helped me assemble a list of all the things people put together, on, the things that they love about Trump and the things that they don't like about President Trump so far. And one of my favorite things is I'll just talk about it now is that, his education, right? I mean, one way or another, this guy has educated me in a lot of, about the media. Like, I remember when he said the media is the problem. And early in, like, I don't know, 2015, 2016. And here I am watching CNBC, and I'm like, I already knew that it was a scam, but I didn't know how bad of a scam it was. And he really opened my eyes 10 years ago to how bad the media coverage really is, how bad the mainstream media really is. I mean, I always knew about propaganda and Operation Mockingbird and all these different things that had gone on through time, but I really didn't realize that it was still going on today, and so that's the biggest thing I think he's been for me, is really, really helped open my eyes in education, and again, just a really good civics course, a live real-time civics course all the time, and we're going to see that what he's doing with this IEPA and these tariffs today. Okay. We're going to go through these clips and you'll see it, and that's where I was going to mention it. But anyway, back to this, the and so, as we think about this, we also have to think about ICE and what they've been doing there. The deporting of people. Has the labor force really shrunk? Okay. And if that's the case, then why are we seeing this, year-to-date jobs cut, the layoffs the most in 20 years? Something just doesn't add up here. Okay. And is it the economy weakening? Is it AI? These are the things that we're starting to factor in, all right, and consider. But something's not adding up here, all right? And then at the same point in time, we have Scott Bessent, our Secretary of the Treasury, out saying that jobs are booming, okay, and inflation is falling. And, the data doesn't say that, right? This isn't saying that. Jobs aren't booming if we're seeing, the most October layoffs in 20 years. Now, it's a one isolated month, okay? And so you can't make a lasting, substantial story out of 1 month's worth of data, okay? It could be an outlier. Like we talked about yesterday when we looked at the ADP, right? It's like 1 month, the North is down 63,000, and the next month it's up 8,000, and then next month it could be down 30, then up 30, the next month after that. So again, there's a lot of bouncing around on this, and there's cyclicality, and there's different reporting issues, and there's a lot of things that go on in this data, and it makes it, unclear. And that's why we put moving averages on things, and we try to smooth it out so we don't get fooled by 1 month's data, 1 month's worth of data. And that's maybe what's going on here, okay? And again, when they come out and they say, the dollar slides on challenger jobs data, I guess I was expecting this. I just didn't know what would be the cause, and now we see it, okay? Or what they're going to blame, what they're going to use, what they're going to utilize, all right? Okay, so that's that. I think we're through that one. And then I wanted to look at this just so you can see a chart. Again, look, the number is the number, right? But I don't know if it's as bad as what they're portraying, okay? So U.S. job cuts surge. And you can see here it is. Challenger data shows the third highest level since 2020, okay? And if you look back, in 2020, you can see that big spike back in there, pretty significant. And then obviously it levels out all the way through 2021, 2022. And then it kind of comes up to a new level at 0.1 million, goes sideways for a while. We get a spike there in March of, is that this year? So we get a little spike. I think it's looks like February and March of this year. There's January, February, March. I would say February and March. Then it kind of comes back down, and here we go heading up again. So something to pay attention to. It is elevated, right? But it's nothing like obviously 2020, back in, COVID days. And it's really not even close to where we were earlier this year, and that's that 7 month. Okay. That's where they're saying, the highest in 7 months. All right. So what are we dealing with here? We don't know, but again, something to be alerted to and something to pay some attention to. But again, is it going to derail the dollar? If the dollar is going higher, this isn't going to be the thing that's going to derail it. It'll give it a little speed bump and a hiccup, but it probably isn't going to be the thing that derails it. Okay, and I think we're good there. All right. Okay, so let's keep rolling here. We've got that underway, and then we have the Bank of England rate decision and the impacts on that. All right. Okay, so the Bank of England's out saying that inflation has peaked. They're raising their GDP estimate from 1.25% to 1.5%. This is the second straight pause. Okay, Bank of England rate announcement was widely expected that they would stay at 4%. Okay, they started on a cycle, right, of rate cutting. And it's the second now for 2 months, two different meetings now they've paused. Remember, the one before that, they couldn't even get the vote together. Okay, it was like a train wreck. They couldn't get the vote. For some reason, they couldn't assemble the vote. They had to revote. Anyway, this one came in with a 5-4 5-4 vote to hold. Okay, so fairly balanced, right? Little, not definitely not overwhelming. 7-1 or 6-2 or something like that, right? Pretty balanced. And so they're holding with the idea that they want to see a bit more data. Okay, but then I don't know if I showed this. I don't think I did. I was talking to someone else about this, but I would love to show this because I wonder if I can show that real quickly. Let me. This is probably. I can't. I don't think I can. It's on a different stream. But anyway, the UK was out yesterday saying, let me just see if I can read it. I can probably read this. It's comical, really. So they're looking for more data. And let me get this. I think it's worth the time of doing this. Okay, I can read some of this off to you, I think. Here we go. No. Must be. Here it is. Okay, here we go. I wish I could show the headline on this, but it says, the UK Stats Office prepares to cut back data after doing too much. Okay, it says, Britain's embattled statistics agency will stop producing swaths of its data after a crisis affecting crucial economic figures was worsened by it doing too much, too quickly, and on too many fronts. The Office of the National Statistics has been producing an unsustainable amount of figures while struggling to get enough households to answer surveys underpinning the most important economic estimates, according to James Benford, the Director General of Economic Statistics, right? So it goes on and on and on. But the point is this. We're in this world of AI, data centers everywhere, right? We got more storage capacity. We have more supposedly compute power than ever before. And they're cutting back on the data. So you have to, that's a red flag, right? And here they are saying they're going to hold, the Bank of England's going to hold, okay, because they want to see a bit more data, all right? But they're telling us they can't handle all the data that they're trying to, they can't get good data. They can't handle it all. I mean, you can't have it both ways, right? So it's just here's what's really going on, right? Is that they're going to give us, here's what I think's really going on, is that they want all of our data, all of our information to feed their large language models and their AI, and they want to give us almost nothing in return, right? And that's the way I see this, okay? So this is, again, back to this narrative control. The Bank of England says we need to hold because we're going to see a bit more data. That's fine, whatever they want to do, you know. And they accept, and at the same time, they're saying that they suspect, the Bank of England, all their economists are saying that they see a significant cooling expected across Europe that likely leads to more rate cuts, possibly starting in January. All right. Okay, now this gets to the real issue, I think, right? Here's the nuts and bolts of it. They have a $35 billion hole to fill, right? It will likely be done through tax hikes, okay? Remember, we had Rachel Reeves, we were talking about her the other day, the Chancellor of the Exchequer, blaming it on Trump and the tariffs, okay, and then saying, yeah, we're probably going to have to raise taxes. Well, now we get a little more information on this, okay? So what they're going to do is they're going to do an extension of the freeze on income tax rates, trying to raise about $10 billion from that, okay? So again, still $28 billion less than what they need. Then they're going to hit them with gambling taxes, and then they're going to go after tax avoidance measures, okay? That means cracking down, right? Trying to use AI, to find people or whatever technology they can use to highlight red flag people, and then obviously send in, whatever their IRS is to collect more taxes. And then they have a council tax. They're going to have pension taxes, okay? And then they're going to raise income tax and increase the tax base, okay? So again, this will go against the election manifesto, and this is going to cause a lot of frustration in the UK, possibly lots of big protests. This is the kind of stuff they're dealing with in France, too, okay? This is why Le Cornu basically stepped down as prime minister after 27 days. This is why they've had 6 prime ministers over the last 2 years, and this is why they could barely put a cabinet back together, and they were in disarray about a month or so ago. And this will resurface, right? Just watch. This is going to resurface with France, just like it resurfaces with UK, and we're just going to go round and round with this, right? The UK is going to try to raise taxes here and here and here, and the people are going to push back, and they're going to try to smooth it all over, and they're going to take away your data so you have no idea what's going on, but yet they want to take all of our data, okay? So that's how I see this going down. I think to me, it's hard to argue against that. I think that's a pretty solid case, okay? So for me, from a currency perspective, for us, I think the thing is to think about, will the pound go down, okay, relative to the euro? Because euro's already a train wreck, right? One currency, all separate debt markets. And I have this great graphic I'm going to show next week. I found this great graphic that breaks down all of Europe into the East, the West, and It breaks it down how they where the GDP is at, and it groups things very nicely. Okay, and it shows you what matters. It really points this out, and I probably could have grabbed it for today and given us a little bit of a an hors d'oeuvre on it, but it's just such a great graphic. So I can't wait to show that. But the point is this, here's what else they're saying. This is also just funny as can be. When they were out talking about this morning, they're asking, will the AI adoption be slower in Europe? Okay, and will this allow Europe to hold more jobs for longer? You're like, okay. So now they're like, look, we're not in this AI game, and I wish we could stop this thing too, but this is something to really think about because, this is the claim that some of these Europeans are trying to make, right? That they're not even in the game with the AI, okay? And they're saying, well, maybe because we're not in the game, right? We're not in this AI space, that we won't see the job cuts and the job losses as fast as maybe the U.S. will because they're further deeper into this AI, right? And the same thing with China, and we don't know. We don't really know the data that comes out of China anyway, so it's hard to tell. All right. Okay, so this is the claim that they're trying to make. This is just getting messy, and this is the thing. You have to try to keep a sane mind through all this and just say, like, okay, step back, listen to what they're saying, because they're gonna talk out of both sides, and they're gonna do it nonstop, okay? And, you're going to get Starmer who plays cover up, and then you're going to get Reeves, and this will be a very orchestrated machine to how they're going to convince people that yes, we have a $38 billion hole, okay, and we have to somehow do this, and it's going to come down to the people. We're going to tax the heck out of you one way or another, all right? And how are we going to get this? How are we going to get you to do this without creating massive protests and ousting our government too, okay? And remember, anyway, and you go back, and I mean, I don't mean to laugh at Rachel Reeves crying, but she was literally sitting in there, about to be ousted. It's probably been 2 to 3 months ago now, sitting in there crying, with the idea that she was going to be kicked out of being the chancellor of the exchequer. And Starmer had to step in and bail her, basically say, yeah, we're not going to get rid of her. And now she's going to be the one that has to implement these taxes. And the question is, are we going to see those tears again or not? I mean, and I don't mean to laugh at someone's crying, but, like, she is about ready to inflict a massive amount of pain on the whole UK population. All right. And so somehow those tears they're not that wet to me. All right. So, all right. Keep rolling here. Anyhow, hopefully that gives you some good background on what's going on with this stuff. Okay. Bitcoin covered at 100,000. I'm going to look at these charts here in a minute. I think we're close. Yeah. Let me just talk about this a little bit and then we'll look at the charts. All right. So I was just watching this lady. I can't remember her name. Big investor. I want to say Kathy something, but I can't think of her name. Anyway, she was out this morning talking about Bitcoin and going to 1.5 million or 1.5 trillion. I mean, who knows what she was saying, right? And but she backed off of that. Okay, she's slowly backing off of this. Okay, and the reason is stable coins. All right, she's saying that the stable coins are surpassing some things. Okay, that Bitcoin could have delivered, but now it's not going to be able to. Okay, because the stable coins are filling that void. All right, now. This is something else we need to dig into. Something I'm working hard on is to understand these stable coins relative to the Genius Act, the Clarity Act, everything else, and the tokenization and all these things that are going to go on, okay, that we need to be aware of. But the problem is I don't want to just talk about it, not have a concept around it. Right now it's a lot of stuff, and you're just trying to take a lot of stuff, right, and figure out like what is really going on here. And again, this is why the technocracy study, right? Why being on that round table, why people like Aaron Day are so valuable, because I just don't know anybody who knows this stuff better than he does. And he's continually learning every single day, right? I mean, he's coming up with things every single day. And so it's so valuable to us, right, to be able to have someone like that we can, partner up with and team up with and share ideas with, because again, I understand these markets, I think as well as, well, I don't know. I mean, I don't know. I couldn't understand them any better, right? I mean, I've put my heart and soul into this, I guess. And so the key is, how do we take that and pair it up with his knowledge on this? And then obviously Patrick Wood and Courtney Turner and try to pair this stuff up. And so I hope there's a lot of great work to come out of that Technocracy Roundtable as this continues to advance. And that's, again, back to Bitcoin, right? Back down to 100,000, right? We talked about this the other day, this range. And we'll look at that chart here in a second of Try to buy it around that 104, 105. It's going to get really scary. Then if it rallies to 115, you can sell it. And then right now, to me, it feels easier to sell it than it does to buy it. Okay. And that's because it's down, right? It's always easy. We just love the, we have a recency bias, right? We think about what just happened and we want to participate in that, right? That's part of this FOMO, right? We have this recency bias. And with that, we also have FOMO. We want to jump in on that recency bias. But the key is to be able to say, yeah, but 2 weeks ago, it took a dip, then looked like it was going to rally and maybe it was going to break out above 115 again, right? So again, this is why these ranges matter and the time frame matters. And if it feels bad, it's probably a good trade, usually. Not always, but usually. Okay, and that's the key, is what we're looking for. If someone's looking to trade this Bitcoin, I don't think it's just going to go down and break 100,000, right? It's going to have to wear people down first, right? It's going to hit 100, it's going to bounce, maybe 107, 108, 114, something like that, come back down again, scare people, go back up again, scare people. And it could probably hover above 100,000 for quite some time. And then can it just snap through there and go to 80 one night? Yeah, I mean, it could, right? What would be the event? Well, a stock market, right? Again, risk off type of a situation of people saying, I just got to get out of this Bitcoin. I got to get out of this gold. I got to get out of these things, right? To kind of cover these other positions and things. All right. So that's probably getting a little bit murky. Anyway, the point is this, she was out saying that, that it's digital gold, right? Bitcoin is digital gold. So it went from this transactable currency initially, it was going to give you privacy, right? Well, it's not transactable. It's very expensive to transact in, okay? It's not very efficient at transacting, right? There really isn't privacy with this thing because people are actually able to get a hold of the ledger and they're actually able to go and hijack people. If they feel like someone has, 500 Bitcoin, they could get that ledger and they could actually go and hold them up for ransom. And there have been cases of that happening. So it's not private. Okay. So again, not transactable, not private. Right. And what's the other? There's a bunch of things that go with it. Anyway, it's not what it was originally cracked up to be, right? Then they have to throw it in an ETF, right? BlackRock gets behind it. They put a wrapper on it. You can look up what that means, Bitcoin ETF wrapper, if you want, and kind of see what BlackRock has done with this, right? To try to, again, continue to try to keep it relevant, right? Keep it as relevant as possible, right? But this stablecoin stuff is the big concern, right? It's growing like crazy. People don't know what it is, and it's displacing the benefits that Bitcoin could have had, right? And again, if we believe that Bitcoin was potentially came out of a 1995 NSA, National Security, white paper, and it wasn't really Satoshi that developed Bitcoin, right? That was just a story that we were told, some genius from some far off land came up with this idea, and we don't know where he went. We don't know who and so again, the whole thing feels a little too mysterious for me. And now we see the stable coins coming on strong, right? Displacing Bitcoin. That was what you would do. You'd throw this Bitcoin out there as a test run, see what you can do, see how you can manipulate it, see how you can get people's minds around it. And then you come in with the real thing, which is a stable coin. What does that lead to? It leads to digital currency, like we're seeing in Europe, right? Again, why would we not think if the central banks have always coordinated in the past, okay, on manipulating markets and manipulating mindsets, like out of 2008, they were all doing the same thing. Then they all started raising rates at the same time. They're all doing this coordinated effort. If that's what's always gone on, why do we think that all of a sudden they're not going to coordinate on this kind of stuff as well? Okay. So something to think about there, right? In terms of, the coordination of all this stuff. And the other big thing here is that Bitcoin is very much proving that it's a psychologically driven market. All right. What's really behind this thing? Does it really have much value? Because, when it goes to 125,000 and then it comes back to 100,000, and now if it bounces again to 110, these are just, all it's doing is going from psychological level to psychological level to psychological level, instead of having some metric where someone can say, oh, yeah, I think there's value in this and here's why. It's all just, digital gold, right? It's this, amorphous thing that you can say, oh, it makes me feel good, right? Because I have a bunch of Bitcoin, And again, we've seen this Michael Saylor, right, with this strategy and, this group, and we've seen all these people loading up on this stuff, and they're not doing it very wisely either. It's like if you really love Bitcoin, this is what you're waiting for, right? Is a chance to buy it. And then you'd come in with some value proposition. Oh, Bitcoin has all this value down here at 100,000 and here's why, right? And you'd have a great claim. Instead, these knuckleheads are buying at 114, 122, and they just keep bringing up their average price. So if they own it, a lot of it at 60,000, and then you buy some at 120, that takes your average price up. If you buy the same amount, so if you buy, 100,000 Bitcoin at, 60,000 average price, and then you buy another 60,000 average price of, let's just say 100, okay? Some of it's at 125, some of it's 110, some of it's at 100. That means the difference, 100 to 60 is 40. That means your average price is going to be at about 80,000. And that's where this MicroStrategy's average price was, about 77,000. The market loves to go down and take these people out, right? So if it goes down to 77,000, the structures that he's created, he'll get blown out, right? And all that Bitcoin will come out on the market, right? He'll have to sell it all because of all these crazy situations that he's created. All right. Okay. All right. So that gives us the Bitcoin. Let's jump in and take a look at some of these charts here. Let's look at that first, since we were just talking about it. That way we don't have to double back. Okay, so we've got this Bitcoin, and here you can see kind of a messy chart, but I'll clean this up. Let me get rid of a couple of these things just so it's not distracting. Okay, we got that. There's our 100,000. I'll probably mark that a couple times. So back in here, we had this gap, all right? And this is one of the things I want to highlight. We had this gap right in here, and this was, you can see that gap. That was like November of 24. And this is messed up too. Things are always breaking. Okay, this was November of 24. Right? We get this gap, okay? And then after you see that gap, it was pretty good chance that this thing was going to go to 100,000, okay? And that's what we were talking about. A big psychological level. Gets up there, trades that area quite a bit. Okay, you can see it just kind of spent a lot of time around, a little bit above, a little bit below, but generally speaking, hovering around that 100,000. Then it sells off, right? Comes back into this 75,000, right? Almost exactly. Lows were like 70, right around 75,000. Another psychological level, right? Rallies back up through 100, comes back and retests 100 a couple times right in there. Rallies up, where does it go to? 125,000. So we're really 75, 100, 125, now back down to 100,000. Okay, right around in here. So the question is, can it hold this 100,000, or are we going to see this thing come back and test the moving average somewhere out in here? Like maybe, could this thing go sideways all the way until here, maybe, right? All the way till we get to this projection of this moving average, and then it starts to break down, right? That's a possibility. What if it breaks down to 100 before that? Well, then we could start to see maybe something down in this area, right? Maybe down in the 90,000 range, something like that, And then that would be a big concern if it started breaking these big moving averages, because that would then create, people who are willing to take to think about the short side. Right now, the trend in this thing is clearly still up, right? It's above 100,000. It's above all the moving averages. The trend is clearly still up in this Bitcoin, but it's showing signs of struggling, right? Bouncing between these psychological levels. And if it breaks this 100,000, it's a very big psychological level for it. So Kathy Wood, that's whose name it was. She's the one that's behind, a big Bitcoin purchaser. Okay, so, and she's the one that's out saying 1.5 million for Bitcoin or something like that. All right. Okay, so that's Bitcoin. That's kind of our concept. And what's the range on this? We'd probably be looking at something like, if we were going to trade this thing, I think the other day I was saying something like this, from the green down to maybe like, something like that. Somewhere around like 103 would be a spot where you'd be considering to be a buyer, and something like 111, 110, 111 would be a spot to be a seller. And can it trade across that purple zone that whole time and just kind of chop 103, 108, 103, 108. So it could be a great trading market for someone who really wants to be involved in this. And it might be a good trading range. Very well could be. All right, let's take a look at this. Again, just a trading vehicle. All right, so yesterday, I want to go through this, what's going on here. So again, what we're looking for is, let me see if I can throw this back in there. I don't know why it keeps resetting, but I'd like to just leave that one in there. Okay. So this is that Elliott wave concept, right? We get this, wave down 1, wave up to 2, consolidating down to 3, consolidate to 4, down to 5, right? 3-wave pattern with some consolidations in there. This would tell us, that if it went down like this would tell us that, there's some impulsive moves occurring in this market. We keep getting this move down to 1, but we consolidate to 2, but we never really get much follow through. Is that what we could be getting here, right? It's possible that we could be getting that here. And what happened yesterday was, again, we get this wispy spike down, okay, right around in this area. Let me just mark this with, now let's keep it with that purple. Okay, we get this wispy move down into there, okay, and this is off the fear that Wall Street says AI is falling apart. Sure enough, yesterday they come in and they just rip this thing on the upside, right? Very, very stiff move on the upside. And they took it exactly to where they should. And what I'm looking at here is this gap back in here, right? There was a gap that occurred back in this area right there, okay? And so that's where that purple, this little purple shaded zone that I put right there came from. And then we get these prior lows, okay? Right here, here, here. Okay, and then this gap through it. Okay, so there's a very good chance that with that gap back in here, okay, this one, and then this gap right here, okay, when it gapped through, and then the memory of those prior lows, that there's a good chance that when that thing gets on a rampage, that's where it's going to go. Okay, so it's gone there. Now what we can see is we can actually see energy building in here. Okay, so we can see the red about to go inside the white. Let me mark that with the dark blue. Okay. And so the question is, can this S&P hold inside these bands, the red and the white, okay, not break out on the upside, and as this energy builds, and maybe we get that move down to that number 3, right? From 2 down to 3. You know, we got moved down 1. Now we're consolidating. Can we consolidate? Can we get that move down to 3? All right. If so, then that starts to give us an indication that finally this market is rolling over. Why do we care? Because remember, we looked at all the overvalued on all the stock markets on the monthly time frame. We had it on the daily, weekly, monthly. The dailies burned off with a couple of these sell-offs. The weeklies burned off with a couple of these sell-offs. Now is the monthly going to burn off? Are people getting lulled to sleep with the idea that maybe a big downside move is coming into the end of this year, right? This challenger job cuts, you know, it sort of strikes me as funny because typically this is a time of year when you start gearing up for holiday hiring, right? Seasonal hiring. And are we going to get a big bounce back in that number in November, right, as they gear up? As we're in November and as November rolls on, are they going to see a huge reversal in that number? And then they'll just negate it, okay? It'll be like, oh, yeah, that was just a one-off in October. Or, you know, September, October, and then we get the seasonal hiring. That's what would typically happen. The question is, you know, are we going to maybe see something different here? What could take this market off of, you know, its upside move? We still don't rule out that 50,000 psychological target in the Dow for the end of the year. Okay, not ruling that out. But the way we would start to rule that out is if we started breaking this prior low, right? If we started breaking this low that occurred yesterday, we start breaking that and we start getting down into these lows. If we start breaking those lows, then this starts to change the game, right? That's that move from 0.2 to 0.3, right? On that little diagram below me. Then we're starting to break that level 1, right? Once we start to break below that, whatever that thing is, then we start to get an idea that maybe this market can roll over. And the biggest driver for me at this point, the thing that I kind of hang on to that this thing could roll over, you listen to all the news and all these things, is the deep overvalued on that monthly time frame, right? The weeklies have worked. The monthly's still in play. Let me just pull that up. Let's just show it again real quickly, just in case. Let me get that thing here. Here it is. And let me flip over to this. I think that'll get us there. Yeah. So again, you can go all the way across U.S. stock markets across the top. You know, the Dow, that right-hand column, the red, overvalued. S&P overvalued. NASDAQ overvalued, right? That right-hand column in each one of those. Overvalued. You know, the Russell, again, that's not showing up. That's a whole different reason. Nikkei overvalued. You know, FTSE. UK FTSE overvalued. The Dow Jones Euro Stocks 50 overvalued. You know, the Spanish IBEX overvalued. You know, across the bottom, Hang Seng, Kospi Index, the Topix Index, right? The Singapore Index. All of them are pretty undervalued. The only one that really isn't on here is the French, okay, and the Swiss, right? Those are the only ones. And the German DAX is kind of burned off too. So Germany, France, and the Swiss doesn't really have that overvalued. And the funny thing is, you know, we've been talking about those a lot in terms of, obviously, France has been weak. Why would people be piling in and running up their stock market when they can't even form a cabinet, right? They can't even keep a prime minister on hand. Same thing with the Germany, right? Germany, we see, you know, constant weakness there, other than a couple data points yesterday that we went through. But I just continue to get this sense of desperate weakness in Germany. And then also in Switzerland, right? 0% interest rate, the signal in the Swiss franc. Is there something going on in that region that we need to be aware of? And remember, these guys are saying maybe we're not going to get burned as bad in short term with jobs because we're not as deeply into this AI space. And AI is going to take over U.S. jobs faster than it's going to take over European jobs. To me, that maybe, right? That strategy sometimes works, but usually that strategy doesn't work in a high tech world. I mean, maybe it will work out for them. We'll see. All right, let's take a look at this Dow. I just want to look at that quickly. Again, we're watching this 47,797. Okay, and yesterday what I saw a couple times was the S&P would be going up and the Dow would be going down. The S&P would be coming down and the Dow would be going up. So these two are doing opposite things. Not out of the ordinary. It's been doing that for quite some time. Remember, we had those big monthly signals, and the NASDAQ and the S&P were ripping. And the Dow really could hardly break to new highs, okay? And the Russell could hardly break to new highs. So it's not like these things haven't been, losing correlation. It's just, is there a big shift taking place out of the tech and out of some of these markets into the larger balance sheet stocks, right, that sit in the Dow? Are people looking for safety? Are they discreetly trying to move out of some of this stuff and into the Dow? Okay, while this other stuff falls, the Dow stocks could fall less, okay, than everything else. And so are they trying to make that play right now? Are they trying to move? And that's why I'm watching that move yesterday up to in the S&P right to where it should go in that purple shaded zone. It filled the gaps, went up to the prior lows, tested that area, then it sold off into the close, okay? And a lot of times we want to watch what happens into the close. They sold the heck out of that thing yesterday into the close, okay? And a little bit with the Dow as well. Not quite as the Dow didn't do that in my mind, right? The S&P is the one that sold off hard in the close. I wasn't watching the NASDAQ at the time. I can only watch so many things. But the S&P clearly was selling off into the close, and the Dow not so much, right? So again, out of the S&P into the Dow, you won't see an instantaneous move like that. A lot of times it's out of the S&P, 2 days later, start coming into the Dow, right? It's not instant. It's not like a direct transmission. Sometimes there's a little bit of a lag to all that. Okay, let's look at this Russell. We haven't looked at that in a couple days. Okay, so again, just hovering at all-time highs, sitting up above that pink shaded zone. So again, it's the bias is still to the upside, no doubt. But it's not really participating. It's not showing us anything. While these other markets are going sideways, it would be kind of nice to see this Russell starting to move higher, showing us that we are getting that growth down at the small and medium-sized business level. And we're just not seeing it come through yet. Maybe it will, but not yet. All right, and then I wanted to look at, let's see here. I wanted to look at the 10s. This 10-year note, just a brief look at this, because it's sort of struggling here as well. So yesterday it got to the bottom of this breakout zone, okay, and it looked like it was going to break, and now it's coming back up across it, so just a mess, right? This thing has been a mess, and here's why it's been a mess. Let's look at this trend channel here, okay? So we've got this, we've been watching this. Just the way this thing is just hugging the bottom of this trend channel is just crazy, right? I mean, it's been hugging this thing since really down in here is what? This is November of last year right there. And let me get rid of that big yellow circle. There we go. Okay, so you can see this ever since that, that vertical pink, purple little box I just put on there. You can see it's just been hugging the bottom end of this trend channel the whole time. This is very odd behavior. This is a market that doesn't have a whole lot of anything behind it, right? It's just wandering, right? And it's limping higher, but not very well. And not a lot going on there for one of the biggest, probably the biggest, most liquid market in the world, right? The thing's just kind of doing nothing. And that when this happens, it usually leads to some kind of a big move. You can see we have an energy build that occurred there, that blue box, right? The red going inside the white. Let's take a look at the weekly, see if I've got a weekly chart on this. Here's a weekly. You can see there's a big, again, this isn't going to show us a whole lot other than all I wanted to look for was this. Okay, is that we have an energy build going on there too. Okay, again, there's other ways to measure the energy build, but this is kind of a dirty, quick and dirty, down and dirty way to look at it. The red going inside the white, marked it with that blue box. So there's energy on the daily, right? It's hugging that trend channel. There's energy on the weekly. This thing has a chance, right? It definitely has a chance to make a move up into here, right? And retest this moving average. Something like, here we go. You could do something like this, something in that range, right? This wouldn't be a big surprise, right? This is what a market that has some juice in it would do, right? It would come up and retest that stuff. And there's lots of reasons for it. You've got prior lows down in here, right? And you've got a lot of volume back in there. So it's like a magnet and it's not going there. Now, it could go there quickly. Something could happen. Something out there could happen. Some event. Money flows into this 10-year note. What could it be? Maybe a stock market sell-off. Okay, that's possible, right? That would probably drive fear. And this is what this thing loves to react to, right? When it can't move like this, it needs some kind of an event, like a fear, or the Fed or the FOMC speakers or something like that to say something that's a little out of the ordinary to get this thing moving, right? Fear, right? Money to move, people to do something, right? Right now, people aren't doing anything because they apparently feel like they don't need to. All of a sudden something happens and now they have to change their stance, right? Forces action, forces behavior, right? Forces them to move money. Where do they move it? To safety. This would be a safe haven, right? That 10-year note. That's what I'm looking for, is some kind of an event. If we hear some kind of event and it's a pretty scary event, place to go is to the 10-year note, right? With the idea that it can go up and retest this moving average. That would make sense. All right, let's take a look at this. The gold, I don't know if we've looked at that in a while. Okay. So gold's just sitting right around this 4,000 level. Let's see here. Actually, I need something a little bit more than that so we can get a better look at this. There we go. Okay. So we came back to the moving average here. This makes a lot of sense. It's kind of hovering along this moving average down in here. Okay. And this level is at, let's see where this moving average is sitting, right around that 3,000. Right around 4,000, 39.50 to 4,000. Okay, so consolidation, right? That's what we were looking for after we saw this thing crack. Some kind of consolidation. Would have loved to have seen a converging triangle. That would have given us a little bit more direction. Right now, it's just holding this moving average. So above that moving average, the trend is still up. Below that moving average, it'll be down. But right now, you could pick away at this thing on the long side with the idea that it could go up and retest this 4,400 or higher going into the end of the year. All right. And then silver, let's take a look at that. We haven't looked at that one in a little bit. All right, so again, we got those two purple lines on there. It's just kind of hovering between those two. Let me slide it over so you can see those levels. So we're talking about, 46.50 to maybe like 49.25. So 49 to 46.50 to 49, somewhere in that range. Probably just going to chop in there for a while, and then we'll have to see, maybe we'll get a harmonic structure or something in here. That would be really nice. Some kind of an energy build. It kind of helps us push this market in a direction, right? More than likely going to resolve on the upside, as we saw with the gold, but not guaranteed, right? There's some other things at play here that may not guarantee that. Okay, I think we're good on those. And let's see here. All right, I'm going to come back to that and that. Let's go ahead and do this SCOTUS. I want to run this clip here real quick of, let me give you a background on this guy. So this is Wilbur Ross, okay? And Wilbur Ross is known as the bone collector, right? Or the king of bankruptcy, right? When there's nothing but bones left, he comes in and buys it, then he restructures it. He's been involved in industries like steel, coal, textiles. He restructures it, cleans it up, sells it for a profit. Originally, he was thought to be worth a couple billion, $2 to $3 billion. But then when he came in as a Secretary of Commerce under Trump, a lot of documents were disclosed, and so it showed up as net worth of $700 million. So not quite as much of a player as what we originally thought, but still pretty significant player and a wise man, right? I mean, a little bit spooky, definitely getting aged, but in his own way. But the point is, a very wise person and a good opinion on this stuff. So let's take a look and see what he has to say.
Today is if he's upheld, then we're in the status quo. Businesses will be able to plan, foreign governments will be able to plan. If the Supreme Court, which I do not think they will, but if they were to rule the whole thing was not legal and reverse it, there would be a real mess. And I think it would be very bad, not just for foreign trade, would be very bad for markets, because businesses can adjust to good news, they can adjust to bad news, very hard to adjust to uncertainty. And everybody would know that if he were overturned, he will find some other way to try to reinstitute them. Meanwhile, there would be enormous confusion about refunds. You've heard that there's something over 100 billion has been collected. So one question would be, how do you make refunds if those are deemed necessary, and to whom? Do you make them to the importer who technically wrote the first check? Do you make them to the importer's customers who ultimately bore at least part of the burden? What do you do? These would be unprecedented and very unsettling things.
That's a great point,
Especially
though.
because in many cases, the other country has already agreed to lower their tariffs in reciprocal nature to deal with Trump's lowering from his original plan. What do you do then? Do those tariffs snap back up to the higher level? Do they stay here? It would be such a mess.
Mr. Secretary,
that I would be very shocked if the court would rule it.
if I can just ask.
Okay. So that was Wilbur Ross, and what he's talking about, obviously, the SCOTUS case, right, on the tariffs. This is the backbone of this Trump administration, so it's very significant, and this is why it's good to go to a guy like this who's been in the administration, right? He was a Secretary of Commerce. This would have been his area of expertise. He's got a background in a lot of different industries. He understands what's going on, right? He knows how this stuff goes down, and and what he refers to in here is giving money back, right? 140 billion in tariff refunds. And we've been talking about this, it's like the tariffs were really bad, then all of a sudden it's like, what if we have to give this money back? That would be really bad. And this is the uncertainty that he's talking about. The markets can deal with good news, it can deal with bad news, right? They'll just make a price adjustment. But the uncertainty, they don't know what to do. And so that's the thing with gold. Where are we with gold? Where are we with treasuries? Where are we with stocks? Lots of uncertainty right now. Lots of indecision. Are stocks going to go higher into the end of the year? Or are they going to sell off? Are we at a top? Or are we going to blow through and go to this 50,000 in the Dow? In the meantime, we're going sideways, right? We're treading water in the gold again, treading water in the silver, treading water in the 10-year note, treading water in the stocks. Even though the stocks are still near all-time highs, there's a chance, right? Why? Because of that big overvalued that we could see a sell-off here. Now, where we're going to go with him is he doesn't think that this is going to amount to much, all right? And that's where we're heading with him on this, okay? He's going to talk about this IEPA, right? This International Emergency Economic Powers Act, right? And it's good to know what this is, right, around this case as we hear news come out on this. And then was it yesterday or the day before the hearing started? I think it was Wednesday. And Scott Bessent was there and Jamieson Greer was there. Originally, President Trump was going to show up at this thing. But then he said he didn't want all the attention on him because the president had never attended the Supreme Court hearings before. And would there be influence, And so, but nonetheless, the importance of this is important to them, and I think the real reason is that if they feel like these arguments aren't going well, Bessent and Greer are going to automatically start adjusting and using other things to continue forward these tariffs. Now, we're going to get into this with Wilbur Ross about what's probably going to stand and what's probably not. And here we go with him. Let me see what this next one is. So this next one is kind of just setting it up. Who bears the cost of a tariff, right? He kind of walks through this. We've walked through this too, but it's great to hear from him.
And frankly, my view, based on our prior experience, is that the exporting country generally puts in a subsidy to absorb part of it. The exporter absorbs another part. The importer absorbs part. The retailer absorbs part, and a portion is borne by the U.S. consumer. So I think it's a little bit of an oversimplification to say that the consumer ultimately pays the whole thing. That has not been the experience historically. But more to the point, even if it were the case that the consumer did, to the degree that there's an alternative that's a lower net cost than the particular country with the high tariff, consumers will tend to seek that out. So generally, the impact of the tariff is somewhat muted by that.
Well,
But there will
Secretary.
be.
Okay. So the consumer is not the one that's typically taken the bulk of the tariff hit. All right. And that's the point there. Now, on this next clip, he talks about IEPA, right? That's that international, let me make sure I got this right again. I don't want to say it wrong. The International Emergency Economic Powers Act. And this is going to be important, right? This is essentially, I think, what the Supreme Court is deciding on. Okay. And the question is, um, Wilbur Ross does a nice job of walking through this. We'll just, it has to be called a national emergency, right, to employ it. And you'll see that some of the things that this Trump administration has done hasn't been based around that. It's going to be very hard to hold that up. So this is what I think Bessent and Greer are going to be doing, is looking for other things that they can, if these other things are important to them, like Brazil, right? What they did with Brazil, that was obviously a political thing that they were doing, and they applied these tariffs on them, declaring national emergency. All right. And it wasn't a national emergency. But I've got some comments on that when we get done, because I think President Trump doesn't care. He wanted to draw attention to Brazil, and he did that, and he achieved his purpose. He doesn't care whether the Supreme Court strikes that down, right? His attention's already been met with putting these national emergency tariffs on Brazil, right? It was probably a misused tool, but again, who cares, right? I think he doesn't care if the Supreme Court takes that one away. But here's Wilbur Ross talking about this.
The IEPA, the legislation on the basis of which the president is imposing these tariffs, has one criterion, namely a national emergency. Doesn't say it has to be national defense, doesn't say anything else, just a national emergency. And it also doesn't define what a national emergency is. It simply says the president has to declare that it's a national emergency. So I think there's a good chance that what the Supreme Court will do is not knock out all the tariffs, but go to a few that are a little bit harder to call a national emergency. For example, the high tariff on Brazil because of their treatment of Bolsonaro. It's a little hard to fit that into a national emergency. Or similarly, the province of Ontario running the Ronald Reagan ad criticizing tariffs. It's hard to take things like that and call them a national emergency. But fentanyl has killed hundreds of thousands of Americans. Hard not to say that that's an emergency. Huge trade deficits. Hard to say that's not an emergency. And then finally, you have the question, since it is under the legislation, the president's job to declare the national emergency, if you knock it out, who then is the one who has to call it a national emergency? Is it Congress? Who is it? And what is the procedure? This legislation did not require any detailed process for determining what a national emergency is. So my guess is that if they knock out anything, it'll just be a few at the margin, but that they'll leave the bulk of it intact.
Okay, so pretty logical, right? I think that's a logical breakdown. That's why I like this guy. I mean, not the most exciting character in the world, but if you can sit through it, right, he gives you a lot of information. This is wisdom, right? This guy's got a lot of wisdom. All right, this next one here he is. This one is, again, Bessent and Greer both attending, present for the Supreme Court hearings, okay? I think we've covered a lot of this already. I don't need to give much background on it. Let's just go ahead and play this one, and then we'll comment on it.
Scott Bessent and the U.S. Trade Rep are both going to be not witnesses, not speaking, but present in the court, shows the amount of concern they have as to what the consequences would be if the court were to knock them out. And then finally, in most cases, the deal, the tariffs, are a bilateral arrangement that has been made with most countries. It's not true with Canada, not true with Brazil, which also differentiates them. But most of them have been agreed. Now, would the Supreme Court really feel it was appropriate to negate a deal that had already been agreed between the two countries? That's a pretty heavy lift. So I would be very surprised if they ruled against.
Mr.
I think
Secretary,
it's more likely that you'll have a split decision, but they'll either let it stand or just knock out a few.
I wonder.
All right. Again, just makes total sense to me, right? I think very valuable to figure out how this case is going to go. And why does this matter? Because this is the backbone of this administration. If they lose this tariff fight, I mean, if they were to lose this a sweeping loss here would be devastating to this administration. Now, there's other ways to go about it, but they would really have to scramble, and it would be very hard, again, making it look like they know what they're doing. They would look like they really have no idea what they're doing if this didn't go through, but it looks really good, right? I mean, a lot of these things, one, the definition that IEPA gives is very broad, right? It's not very definitive. So again, in Congress, and even if this did go down, Congress could, and maybe this is why they're trying to get rid of, we've seen the last couple days, the, why am I drawing a blank on that word? Why am I'm just, sometimes you can't get a word, but the majority, right? Trying to bring the majority down where it's, you have to get the 66% or whatever it's called. I can't believe that I'm drawing a blank on this word. But anyway, President Trump's been throwing that out there. Is that so that in case this does go down, that Congress could come through and overrule and basically say, yeah, these tariffs are legal? So there's a lot of stuff in the mix here. One way or another, it's a civics course, right? We're learning a lot about this stuff. I've never heard of IEPA. I have no idea what it does or doesn't do, but they're pushing the boundaries of this stuff, right? And the thing is, no other president really ever seems to push the boundaries. So I give them a lot of credit for pushing the boundaries on this. What's the other side of it? We can make a claim on the other side from a technocracy perspective and too much power in the hands of too few, right? And turning this over to the technocratic rule. Again, if and when President Trump's not there anymore, how much power has he now accumulated under Supreme Court case rulings like this that now get transferred to someone else to use however they see fit? So these are always the dangerous things. And why we have these other branches, that the problem is, are these branches functioning properly? Do we really think the Supreme Court's functioning as it should? Do we really think Congress is functioning as it should, like it was intended? Do we really think all these different agencies are functioning like they should? That's the big concern, is that, these things have been corrupted over the years. And who's corrupted it? You could call it the global elite. You could call it the technocrats. You could call it these people who wiggle their way in there. In every single event that we get, like they say, don't let a disaster go to waste. What was that? Rahm Emanuel and others who've said this. Every time we get these events, they're in there whittling away at these little bills and changing the laws for themselves. So again, all these institutions have been corrupted. The question is, can they survive that corruption or not? And that's what we're seeing get tested right now, right before our very eyes. Okay, so here's the last clip on this. This is about the use of executive orders. This plays right into what I was just talking about. The Supreme Court will most likely not take it upon themselves to take away Trump's executive power, especially when something is unclear like this IEFA that they've used. All right, here we go.
Orders is not unique to President Trump. Joe Biden certainly used a lot of executive orders himself. And so this is not necessarily a partisan issue. You can question what he's doing with them, but the subject matter of a lot of his executive orders is the same subject matter as President Biden had. They just came out in different sides on the issues, like EPA and other things of that sort. So I think it's a little more complicated than that. But in this case, I don't believe will be viewed by the Supreme Court as their opportunity to define executive power in general. The Supreme Court tends to stick to the four walls of what's before it, and that isn't really what's before it. What's before it is, in these instances, did the president have the power under IEPA to unilaterally impose the tariffs without going back to Congress? then the complication there is obviously constitutionally the Congress has the power for tariffs. So this is a very specific combination of legislative history and facts, and therefore I would be very surprised if they used it to make a sweeping interpretation of executive power.
Well,
And I have to say that that's my favorite thing about President Trump, right? Is he's essentially dragging us through a civics course in real time, okay? And and like I said, that's my favorite thing. As we asked that question yesterday, what are the positives? What are your favorite positives of President Trump, and what are the negatives, right? And so let's take a look at that. Again, Jay White put this together for us. So let me put this. There we go. Okay. So here's what we've got. We had Rachel Hawk saying the pros. Canada. I assume his tough stance. Let me, there we go. Okay. So Canada, I assume his tough stance, making Antifa a terrorist group. He has my back. Okay. Pardoning the J6ers, calling out the media. I agree with that one too. Calling out the media big time. Doging the orgs that steal our money and exposing the stolen elections, right? Cons, concerned about the technocracy, but doesn't blame Trump. Okay, I'm pretty much in that camp too. Osvilla's had some great comments lately. Okay, some of the pros, deportations, law enforcement. Yep, and then cons, Ukraine funding, Hamas and Israel. Yep, I mean, it makes sense. David Rocket says, we're living in Orwell 1984. All right, then Crash and Splash had a couple pros here. Trump exposed the media bias, so we've had, I agree with that. I think most people would agree with that. That's, again, one of my favorite things about Trump. In 2015, I mean, he just started exposing things again, it's kind of goes with having our back in the sense that, you think these things, but then you're all alone, right? With Trump, at least we weren't all alone, right? Like, here's someone else that is saying these things that we've thought, and he's not afraid to say them, okay? And so I think having your back and also exposing the media is kind of one and the same in a sense, right? You can put those two together pretty tightly. The other one that Crash and Splash says is Trump exposed DC is never America first. That's hard. That's a good one. Perfect. TZ Burton's had some great stuff lately too. Trump not owned. I hope not, right? I think not. I mean, he's got enough wealth and he can fight things on his own. I hope and pray, right? I hope and pray that he's not owned at all. Okay. Because the thing that makes me question that is COVID, right? 9/11. Why? And maybe there are things he can't do because it just would blow the lid off of certain things that are going on. That's the hope, is that, there are things that he can't take a stance on, and we just can't even understand it. Okay. Trumpette always has great stuff. So here are her cons: supports world peace. Tunnel idea, AK Russia. Also, tunnels idea, AK Russia. I'm not sure I know what that one is. Okay, hope that he brings to the U.S. Yep, that's for sure. Pardoning the J6ers. Okay, agreeing with Rachel Hawk. Exposing the stolen elections. Agreed with Rachel Hawk. And IVF cost reduction. Okay, and then cons, wishes Trump could help Tina Peters. Yeah, I know. I didn't even see that one, and I looked through this, and somehow I didn't see that. But yeah, I wish he could. Tina Peters she got hosed, man. I mean, I can remember that Mike Lindell symposium. I talk about this with my brother and a few others, where it's like, man, did Lindell, whether knowingly or unknowingly, did he hang Tina Peters out to dry? Because she was like, she had the information. She'd seen the voter fraud in Colorado. She knew it was going on, and she was afraid to come out because she knew that she was probably going to get in trouble. You know what I mean? And because they couldn't, that poor lady, I feel so bad for her. I feel so, especially being like I mean, what is she, a Gold Star mom or I forget what it's called, but I mean, she's like a superstar. I mean, I feel so bad for that poor lady. It'll all work out for her, I'm sure, but I wish we could get her a pardon. How can we not pardon her though? When we pardon this guy CZ, who President Trump's like, yeah, I don't even know who he is, and he's the guy that runs Binance. Oh, it's like so frustrating. Okay. And then we've got, let's see, Bill, we've got him saying no positives, I guess, no pros. He's got a lot of cons in here. Todd Blanche, boom, that's good. Ukraine war involvement, true. More Biden than Trump, for sure, but still we're providing, again, is Trump using a lot of these coordinate systems and these weapons as threats? and not so much as, Ukraine's having to there's a lot going on right now. Ukraine's getting funding from all other places, right? And, I think the Netherlands stepped up and funded like 1.5% of their GDP toward Ukraine. Crazy. You can't believe some of the stuff that's going on. And I don't think we're funding much into Ukraine anymore, okay? Except weapons and coordinate systems, which is bad enough but again, part of that could be negotiations to scare Putin, right? But the problem is that it's an escalation that could get very dangerous. All right. Then we have Israel involvement, Epstein investigation. Yep. Kirk investigation. Oh, man, no kidding. Butler investigation. Yeah. And you could do a Butler investigation. Oh my gosh. 2-tier justice system, Cash and Bongino. Yep. Good ones. AI and the evil geniuses. Okay. And then let me get myself out of here. Okay, then we've got Sven says, shifting the tax burden from the people to the globalists. Yeah, and that's this tariff, right? I mean, that fits with what we're talking about here with the tariffs, you know what I mean? And this is the backbone of this administration. This is the real positive of what we're talking about here that, look at what we were just talking about with the UK, right? $38 billion shortfall, and they've got nothing. Okay, they have no other way except to go to the people and tax them more. Look at what we're doing. President Trump's trying to say, you know what? We're going to lower your taxes. We're going to hold that tax rate. That was one of the first things he did. And then he went out looking to where we're getting ripped off and said, let's just go and stop getting ripped off, okay? And let's take some revenue in, just like everybody else has been ripping us off for all these years, and let's unrip ourselves off and try to see. And this is that $140 billion that's sitting in, the Treasury that, that the Supreme Court's going to decide whether it needs to be given back or not. And I think Wilbur Ross did a great job of explaining that. It's probably not likely to happen. There is going to be, they're not going to go through this clean sweep. The Supreme Court's going to pick off some things at the fringes, which is going to be Brazil and some of these Canada and all these other things that they've probably misused, some of these things. But that's the key. It doesn't matter. President Trump still achieved his purpose. He called out Lula da Silva in Brazil for essentially rigging the election against Bolsonaro. So even though it doesn't matter, he could care less whether the Supreme Court shoots that stuff down, I think. It's like he drew the attention to it, called him out on a global stage. Everybody knows his position, his stance on it, and they're on alert, right? They're going to have to behave a little bit better, because if not, he'll come back with something else. And again, here's the other thing President Trump, I think, knows really well, is how to use time, okay? Because the globalists understand, the bad actors understand that we have short memories, right? And we're being trained with social media to have even shorter memories. And so what happens is things happen, and then they know within 1, 2, 3, 4 days, it'll be like just this distant, tiny little spark in the back of our mind, wherever all that stuff's stored. And we're moving on to the next media, the next thing, the next thing. President Trump, he's got a pretty good memory here, and he brings these things back up, and he makes sure that time is he kind of puts time on his side in a lot of ways, if you think about it, right? Bringing these things back up and continuing to resurface a lot of this stuff and calling these jokers out, so that's something to think about, right? Is trying to reverse this thing of, turning us to only having short-term memories to having a little bit longer-term memories and thinking about things a little bit more, So those are some of the things. So thanks for the comments. I think hopefully it's beneficial to everyone to see that compiled. Thanks to Jay White for doing that for us. And hopefully that's valuable to me, so I hope it's valuable to you guys too. All right, so let me circle back in here, and I want to go back to this. Skipped over this. This is this Tesla situation. I think I have, let me throw this in here. All right. Oh, this isn't Tesla. This is NVIDIA. This is out of the FT. It's probably a little bit hard to read because I took a photo and sent it to myself, but I wanted to cover this. So Jensen Huang says China will beat the U.S. in the AI war, okay? This guy's straddling the fence, right, between China and the U.S., all right? And here are the real claims. China doesn't regulate, and China gives away power for free, right? This is China's model. It's like cheap, 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 cheap. And that's how they always try to win stuff. And there's nothing wrong with that, I don't think, okay? The cheap concept behind this, trying to get things cheap. Here's the other big things, though. Let me just keep going here, is that, one of the big things here that China has chosen, right? And let me see if I've got this up here. Yeah, here we go. Okay. So China when we sort of forced China to go the open source route with this AI, okay? And that makes it very fast because it opens it up to everyone. And then when you overlay on top of it command control, right, out of President Xi and his administration, you can get a lot of things done pretty quickly. You've got a lot of people, right? You open source this stuff, and then you command control it. All right. So you direct energy towards certain things. If you know what you're doing and you command control in the right places, there can be a lot of stuff accomplished pretty quickly. And it's, you don't necessarily need, you've got human beings. Look, we still are given pretty darn good computers. Okay. What do we burn? Like 20 watts or something like that compared to whatever these data centers. You drive by, you see these huge electrical substations that, they each have their own electrical substation. I mean, they're very inefficient on power. They might be able to outdo us in certain ways, but the human brain, right, the God-given brain is still pretty darn impressive, right? The way it stores things and processes things, again, as long as we don't lose, as long as we don't let it take away it can be trained too, right? It can be developed and it can be undeveloped at the same time. We have to be aware of that. But the point is that, China has a lot of just horsepower with, over 1 billion people. And, it's 3 to 4 times the population of the U.S., maybe more. So let's just say 4, right? I think that's fairly accurate, about 4 times as much. India also has a lot of horsepower, 4 times as many people as the U.S. Are they as skilled? Are they as productive? No, but again, a lot of times it's just horsepower. So what's Jensen Huang saying here when he says that the China will beat the U.S. in the AI race? And I was talking about, I sent this off to Aaron Day last night to the Technocracy table, and Aaron Day said, look, Aaron Day, true to form. He's like, look, there's no difference between the U.S. and China, right? This is just a war between the technocrats. They're just using both China and the U.S. There's no difference between the two, right? You still think there's a nation state, right? And I'm like, well, yeah, I mean, there is, because there's obviously different defense groups and there is obviously some form of competition going on here. But I do see his point that, is the nation state being torn down, and are the same technocrats running things in China that are the same ones running in the U.S.? And we have this illusion that there's that there's two countries. And to his point, you can't argue with what happened in the negotiations last week, right? When it was supposed to be a 3-hour meeting between President Trump and President Xi, and it only lasted 1 hour and 40 minutes, right? And something wasn't right with that meeting, okay? Just, there's something not above board about that whole meeting and how that thing went down. And remember, it was set up by Scott Bessent, which again raises red flags. We have to watch that. We could speculate all day long and we're not going to know. That's why we watch the markets. That's why we're going to pay attention to news, right? We're going to have long-term memory, right? And we're going to pay attention, tuck this stuff away, and we'll come back and we'll deal with this as we see more things unfold with China. Okay, again, we know what was on the surface was the soybeans, the chips, the rare earth minerals, the shipping, right? The ports and the shipping and the ships and we know all that stuff was top, front and center, but then the defense side was not, okay? And then we see this Palmer Luckey with Anduril, and this guy's going full steam ahead, making these drones, making these technologies, and there's a lot we don't know, but if we pay attention, we can fill these gaps as we go, and that's the goal, right? And so again, Jensen Huang, it's going to be the big news story. This isn't going to go away. This is going to keep resurfacing. Jensen Huang says China's going to win the AI race, okay? And this is going to tick off President Trump. So you have to wonder, too, if this isn't Jensen Huang kind of playing his cards a little bit to say, we need to get access into China, and you just shut us off so we couldn't sell these Blackwell chips there. And might be, that first buddy, kind of like we saw with Elon Musk. Just, I think, Jensen Huang's a little bit more, probably a little more, less of a fireball than Elon Musk. I mean, Elon Musk, obviously there was a big falling out there. Was it on purpose? Was it a show? Was it this? I mean, who knows? That's all for debate. But Jensen Huang's saying, look, you talked about these Blackwell chips and some of these chips being able to be sold to China. Now you're taking it away from us again. We can't sell them to China. This might be him just playing his cards to see if they can't get the administration to open up and sell some of these chips into China, right? And they're going to talk about, if we don't sell our chips in there, then China's going to continue to develop this race, and they're going to develop their own chips with all these other things, right? There's all kinds of stories out there we could go into on this, and they'll keep resurfacing, and we'll keep. I mean, obviously, every day I try to cover something on this AI front, right? It's because you can't avoid it. It's right in your face. All right, and then on that, just a little bit, we have this let me just finish up with this. We have, because we're kind of doubling back here, Tesla's annual meeting today. We know that there's a robot evolution going on there. We talked about the degrees of freedom with the hands. The robots are at like 17. Human beings are 21 to 27. As soon as those robots cross that 21 to 27, that getting the hands of the dexterity of the human being, the robotic thing changes, because it's great. They can do flips and they can run up and down these things and do all, and fight and box and all that. That's all fine, right? We see that stuff going on all the time. When they can do little things, that we can do, and they have the dexterity we have, I think that's a real point in time where, boy, I almost had the word I forgot yesterday again. Synchronicity keeps popping in my head, and that's not the word. It's the singularity. There it is. The singularity. The singularity where these things come together and the computers actually outpace the human being. And I still have to believe that we're a long way from that because, again, we have soul, we have spirit, we have prayer, we have other things that the AI and the technocracy can't even touch. So I think there's a long way before that really happens, but doesn't mean that it won't displace jobs and cause economic heartaches, right? And that's what we're here for, is to try to take back some of our money from the BlackRocks and those guys and figure out how to invest it ourselves, right? Instead of giving them the money to work against us, right? Because we're just feeding the own fire that's burning us in the rear end, right? Okay. So I think that covers it. Musk has, I'm sure this whole thing at this annual meeting is going to come about his almost $1 trillion pay package. The robotics will come up in this, I'm sure. The other thing Aaron Day has pointed out, that Musk, he's a believer that, we're told that Musk is this great innovator and great genius mind. Aaron's done a lot of work on this, and I haven't seen it, but I trust him because I know when he does work, and he doesn't say something without backing it up. And he says that he thinks Musk, he didn't develop hardly anything. He's just been in China stealing all their stuff. Instead of thinking that China's been stealing our stuff, stealing his technology, his innovation, he thinks that Musk has just been over there stealing China's innovation. I can't wait to see that because, it's on my mind. I need to dig in and see what he says and back it up. But that's his claim, and I don't doubt him because I know he does the work. So, but to me, that's a major change of mindset, right? We've been told that Elon Musk is this great innovator, okay? But is he just stealing the stuff? And is Elon Musk what he's cracked up to be? That's the thing. And there's a lot of red flags all over the place with him, a lot of them. And so, again, story to still be told, and that's what we'll keep coming back and trying to uncover that stuff. So hopefully we got a good grip on the markets, right? We're at a tipping point on these stocks still. We're below the 6909 on the S&P. That's our level on the upside. If we crack above that 6909, we have to really reevaluate the upside. If we stay below that, right now the short term trend in the S&P is to the downside, right? We've got that level in the S&P, which is, let me get that again. We've got this level in the S&P, the 47,797. This is on the December futures contract. So, you can pull that up. If you go out and look for it, you can get the price on that. So you can kind of, and I apologize. I wish it was cleaner. And there are probably other markets we can add to this. And maybe I'm going to get some help with that, coming up with other markets. So there's easier things for you to track that you can just put on a quote board. Most quote boards will probably have a delayed futures contract price, so you might want to see if you can find that. Whatever platform you're using, whether it's Fidelity or Tasty Trade or Interactive Brokers or whatever it may be, you might be able to pull up the December futures contracts on this just to have a reference point, right, for these levels. And we'll try to work some of these other ones in there, these other major indices and things like that, so that it's easier so everyone can kind of track these levels and have a feeling for which way the wind's blowing. And in this particular case, as long as we stay below that 47,797 in the Dow, the short-term bias is the downside. And can we see this thing get that wave 2 to wave 3, right? That second wave down. Can we see it get that second wave down? And if we do, maybe we're in for a pullback here of some type, okay? And that'll help rectify, those monthly overvalues, and that could take, we're talking potentially 3 to 9 months before that thing can play out. That can take a while before it finally plays out. So it's a blessing and it's a curse all in one, right? The blessing is we have this idea that markets are extremely overvalued on that time frame. The curse is we have to sit there for potentially 3 to 9 months and deal with it, okay? But isn't that always the case, I guess, right? So with that, have a blessed day, and we'll come back. Oh, like I said, I'll probably do a pre-record. I highly doubt I'm going to be doing a live show tomorrow at 8, but I'll do a pre-record so it's there so you can watch it at 8. And but I'll probably do it. I don't know. I'll probably try to start around 6:30 East time or 6:45, something like that. Try to keep it about a half hour, 45 minutes. I do have a few things on the commodities I want to talk about in Canada, right? I've got this whole thing on Canada. I want to go through the weakness on Canada, and that'll fit with commodity day. All right. With that, have a blessed day, everyone. Thank you.